This week was all about the gamma unwind. And I've been reading about the speculation for days, and it's an interesting story. But we have more interesting things to talk about today, such as the changes that will be made to the S&P and Dow Jones indices. The big news is that Tesla stock will not be included in the S&P 500. As a result, Tesla is down to about $390 per share in after hours on Friday. Now, this is important since Tesla has been a good indicator of where the market has been going in the past few months. With Tesla down, selling may continue into next week. In other news, the markets have been mildly shocked by Warren Buffett and Berkshire Hathaway's moves of late. A few weeks ago, Berkshire began buying gold mining stocks. Given Buffett's previous remarks about gold, the stock purchases caught investors by surprise. But that wasn't the only bomb Buffett dropped. News came out later that Buffett had pivoted to Japan and the large trading houses there. But now, late on Friday, came the news that Buffett has made another surprise move. For all of those predicting an imminent bank stock renaissance, you'd better take a seat, as the latest 13F from Berkshire shows that Buffett has reduced Berkshire's position in Wells Fargo by a whopping 42%. Considering that for years Wells Fargo was synonymous with Buffett's long-running bet on U.S. banks and on America in general. The move is ominous. This touches on a significant question for investors. With the amount of money being printed by the Fed and other central banks, what is this going to do for inflation and the devaluation of the dollar? And this is something we all need to think about because it will impact all of us significantly. And in that same vein, we find that China has continued to reduce exposure to the US dollar amidst fears of massive inflation. China has sold over $109 billion worth of US bonds in the first half of 2020 in anticipation of the upcoming digital yuan that will be a contender to the US dollar's long-held global dominance. This is an issue that will touch every investor regardless of your investment strategy. We will be discussing this in time, but for now, let's go take a look at the charts. And so today we're going to be looking at one chart here is the 3-year weekly, the iShares Russell 2000 ETF, and the symbol is IWM, and the close on Friday was 152.80. Now the reason we're looking at this is when you have a stock market that's been rising, such as from here all the way up to here, when you want to look for a weakness, the best thing to do is go to the weakest indice, and that is being the Russell 2000, because that kind of bears out the cracks in the market before the stronger indices such as the Nasdaq or the S&P. So that's why we're taking a look at the Russell 2000 here today. And as we can see, it topped actually a couple of weeks ago and has this small, say, turnover indication like that. So in my humble opinion, at least the Russell 2000 looks like it's rolling over. Moving on down here into the volume, again, you can see the volume. Pretty decent decline all the way through here. So that's not necessarily a good sign. And here into the MAC, and this turn in the MAC at the top here probably only came about in the last day or two, but you got to watch these things on a continual basis. So you certainly see the bottom there, and I think we're possibly seeing the top here. The question is, how far is this going to go down? But now we can answer that question a little bit later, but we'll see some indications here with some of these other oscillators. Looking at the histogram, you can definitely tell that we've had a melt up, certainly during this period, and this was a huge rebound up to here. But now things are starting to roll over, and you saw that in the last 1, 2, 3 weeks or so. So you had an idea. You also had an idea here from the price rate of change. That looks like a topping process to me, and we've talked about this as well over the last several weeks. One of the things that I didn't like to see was the relative strength index, and we've talked about that too. This top here in early 2020 definitely has a downward trend all the way through to the present. We needed to move up and beyond. I think we perhaps drew the line down here, and we did certainly move up through that trend line here, but we needed to continue moving on up, and I think we're stalling out, at least temporarily here. Moving into the stochastics, you can also see that this is rolling over as well, and it has done that, say, in last previous times. Perhaps this one was, say, a false move, but definitely this one here. So are we going to go through another false move here and have a rebound? That's always a possibility. I don't think it's the high probability, but it is possible. Moving here into the Williams, you can see that definitely a double top here, but for the most part, we have the market rolling over a topping process. We're heading on down below that overbought territory, so we'll see how far down this goes. The Williams is one of the better leading indicators. So we'll have to watch that very closely. Moving on back up here to the price chart, I think that's pretty easily seen here, the topping process. And we've talked about this. I've asked you to prepare your portfolios in anticipation of some kind of pullback. I don't think we're going to have a collapse here. We will have some sort of consolidation, some sort of pullback. I don't think it's going to be all that significant yet, but we'll just have to watch and wait. And the other sign that I talked about was the VIX. I'm not going to show you the chart on the VIX, but for those of you watching the VIX, as soon as that MAC, both the fast line and the slow line, headed up to that zero line, I told you there is a possibility and the probability of a hiccup. This could be a hiccup right now, and hopefully it doesn't turn into much more. But the VIX certainly gave us advance notice that problems in the market were starting to bubble up, and now we see it. So if Tesla continues its downward trend into next week, I think that is going to also pull the market because I don't think that's good news, at least in the short term. So we'll continue to watch this pullback here, and we'll see how far it goes. Again, I'm not looking for a full-blown collapse, but a pullback and a correction I think is needed at this point in time. Now, today I did do some buying. I bought some of the XLE, which is the energy sector. It's an ETF. I've been watching that for some time, and I like where it's trading at right now, and so I decided to dip my toe. I took approximately 1/3 of the cash that I have on the sidelines, and I'll save the other 2/3 for other opportunities that I think are going to present themselves here in the near future. And so for today, that's ChewDog Charts. Thank you.